Hello and welcome back to Death and Taxes, your weekly podcast live stream with myself, John Humphreys, and my co-host, Gene Tunny. Gene, how you doing?
I'm good, John. How about yourself?
Top of the world, another beautiful day in paradise here. We have, as usual, this is going simulcast to Facebook, the YouTube, and the X. On Facebook and YouTube, you will find it under the Australian Taxpayers Alliance. That's who puts this on. You'll see the little watermark up the top corner of the screen, whichever corner it's in when this goes up. That's ATA, taxpayers.org.au. They allowed us to do this. Go check out the website, have a look at the projects, see what we're doing, consider throwing us a few pennies. That's enough for that pitch. But this is a live stream, so you will see all our mistakes in all of their glory live, so we cannot get away from you. It also means we take chats. So feel free to put in a comment if you're watching this on YouTube, Facebook, X, or perhaps wherever Gene is also streaming it. Put in a comment, and if they're interesting enough or provocative enough or just rude enough, then we'll put them on the screen. And feel free, questions, comments, criticisms, and the like. So could you also please, if you're watching this now, give it a like, give it a share, give us a follow. Let's help this go around the algorithm. The algorithm likes things that are already popular. So that's the trick of social media. You are rewarded. To those who have shall be given more. I think that's probably in the Bible somewhere. I know there's also the reverse in the Bible, but that gets a bit tricky.
That's the Matthew effect, is it, John? Is that what they call it?
Yes. Is that's where that parable is. It's those who have are given more. Yeah, very good. You're very good on your Bible there, Gene. Unexpected.
Well, I have anyway. Yeah, we could talk about that later. But yes.
Anyway, as usual, I'm going to start off by throwing to Gene for the roundup of the economic news, all of the news that you haven't been paying attention to. So you just come here to get this quick rundown from my mate, Gene. Gene, what has happened this week that people might have missed?
Well, quite a lot, John. I've been, there's a wealth of information to discuss, wealth of news. It's today. I mean, we got this extraordinary news from the ABS, this big revelation about the huge growth in federal government spending. It was rather shocking. I mean, both you and I know just the large amounts of money the Commonwealth is spending and the challenge they've got reining in the growth of NDIS and some other spending items. But still, I was very surprised when these figures came out from the ABS, which essentially show an increase of Commonwealth government spending on their public servants up to an increase from around 37 billion to 41 billion dollars, so $41,000 million. Yeah.
So I finally got a chance to use the sound effects.
I'm sure we'll find many more opportunities to use that, John. So 5.6% increase in the number of government employees, even though population growth's running at about 1.5%, and an increase in wages paid by the Commonwealth of 9.5%. And across all of the governments within Australia, we're up to a bill, a public service employee expenses bill of nearly $250 billion, so $250 billion. So just a large amount of money on public service spending. And I mean, obviously we need public servants. I don't want this just to be a public servant bashing exercise, because I mean, both you and I have been public servants in the past, so I'm not anti-public. I know. But I mean, it just struck me as completely an absurd increase, and they need to get control of the public finances, or we are going to be in serious trouble one day. I mean, I think we're not in as bad as a place as the US or the UK, but I mean, we're heading in that direction. So that was the first thing I noticed. I was rather concerned about that. Did you want to jump in there, John, or should we move on to Tassie?
As always, I have opinions. And it's hard to stop me sprouting them online. Look, a couple of things I think worth noting about this. Um, One is it's kind of in defense of this situation, partly. When we look at the state government line there, it looks huge, but keep in mind, because of the way we run our school and health system in Australia, which I thoroughly disagree with, and it should be run a different way, but it is currently run so that most schools and most hospitals are government owned. And that means most doctors, nurses, and teachers are recorded as public servants. So I think when people of working for the government, and when they think of wasteful people working for the government, they're not thinking of doctors, nurses, and teachers. Even in a world with a much smaller government, we would still have doctors, nurses, and teachers. So that those people aren't necessarily the wasteful part of this. So it can be a little bit hard to tell here with that state government line to disentangle the useful from the useful class from the bureaucrat class, which is why I often like to. It's just called public service. That's a wonderful trick with wording. Public service, serving the public. Who could be against that? What sort of heathen are you? It's like, but all right, with teachers and nurses and doctors, perhaps that could be called serving the public. A lot of what we're talking about here is bureaucrats. And my complaint isn't with necessarily public servants, teachers, nurses, doctors. It's with the bureaucrat class, the paper shuffling class, the class that you and I were formerly a member of, Gene, the bureaucrat class. And so that state government number, it looks a lot bigger, but it's warped with that. So it'd be great to see this disentangled of quote unquote public servants that are actually directly serving the public versus the bureaucrats who are sitting behind the scenes and mostly giving advice to people who give advice to their boss, who gives advice to their boss, who gives advice to their boss, who writes a one-page paper, gives it to the politician, and they don't read it. So that's the bureaucrat class. The second thing about this that I note here is you mentioned the Commonwealth one, and the thing about the Commonwealth one is it's growing too quickly.
Yes.
But if you think about what's being done by these levels of government, the state government cops a lot of crap, but they are running schools and hospitals. Those are very important things in your life. The federal government has a lot of responsibility. They do control most of the money in this country. Local government, nearly $18 billion. I mean, you would be stretched to think of $18 billion worth of value being received from your local government. So that's an eye-watering number in there. But anyway, the last point I want to make is with this number, the $41 billion odd that we're spending on the federal public service, that is costly. That's a big number. I mean, we don't have the money, right? We're running deficits. We're in debt. We're on the wrong trajectory. So it's costly. That's not my main critique, right? If cost was the only problem here, we probably are a rich enough nation to be able to carry a bunch of unproductive bureaucrats. The problem is much worse than that, right? The problem isn't just that this money is being spent and it's not being productive. I think there's a good case to be made here that this money is anti-productive. What do I mean by that? The bureaucracy now, the federal bureaucracy in particular, has grown to such a degree that it is now an independently powerful part of our political system in its own right. And I would argue that it is literally the most powerful part of our political system. Right. So we've always had political leaders, kings and presidents and whoever is at the pointy end, and they always look like your leader. Then we've tried to pretend that we could control them with parliaments. That didn't really work. We tried to pretend that those parliaments can be controlled by voters. All right. So we say people have to. So you could say, where does the power lie? In parliament, with the people, with the political parties, with the leaders. Look, to some degree, all of those places are nexuses of power in our political system. But another nexus of power is the permanent bureaucracy. And I think if we look at the nature of public policy being done and changed over time, it seems to be self-evident that the permanent bureaucracy is the single most powerful of those arms of our political system. Right? The permanent bureaucracy, I would argue, is able to get more done than either political party or parliament independent of political parties, which doesn't really exist, or the government of the day. And I go back to this story often when I'm talking about this. We've got in the bureaucracy, is that the number of people there? You've got 400,000, up to 400,000 bureaucrats. These bureaucrats are often quite bright, right? They've got job security. They've been working there for a while. They've been looking at the details of their policy area in depth for a while. And they've been dealing with the media for a while, with academia for a while, and sort of getting the best ideas out of academia. So that's 400,000 people who've had their job for 20 years, wearing fancy suits, walking in with a briefcase full of ideas that they've read in depth. Those 400,000 people going up against a couple of backbench politicians and their two 25-year-old staffers. I mean, in terms of the battle there of ideas, that politician's full-time job is to kiss hands and shake babies, or maybe the other way around. So they have not read all the same documents these bureaucrats have. The information imbalance between this army of bureaucrats versus a handful of politicians mostly focused on opinion polls is so lopsided that realistically, the politicians don't write the policy. They don't push the policy agenda. These 400,000 bureaucrats do. And so that's my concern here. Yes, it's very wasteful. It would be nice not to be spending $41 billion on the permanent Canberra bureaucracy. But my concern is that our democracy, I think, is being fundamentally undermined or warped by the power imbalance we have, where the bureaucrats have so much power just because there's so bloody many of them. And that's my argument for why they need to be cut back. Even if we didn't save money, we'll need to cut them back for that reason. What do you think of that, Gene?
Yeah, look, I think, yep, absolutely, John. I should make a clarification. I should have made this up front. So these figures, they include the public service. They also include public corporations and the ADF. So there are some, that Commonwealth figure, there's going to be a significant number of ADF people in there as well as people in public corporations. But the Commonwealth, I don't think it doesn't employ as many people in those public corporations as the other levels of government anymore, I don't think, although I suppose NBN would be in there. So that's just something worth bearing in mind too. So the ABS doesn't split those out, at least in those headline numbers. So just thought I'd clarify that. Just so
although the ADF doesn't hire that many actual soldiers these days. That's a lot of people working in the DoD, Department of Defense, not as many people who actually wear the khaki in this country anymore.
Well, I mean, I guess that's the reality of, there could be a lot of bureaucracy. It's also the reality of modern warfare, isn't it? Now it's all cyber, and now we need drones, and they're talking about an Iron Dome for Australia, which I think is something that is that's worth considering. I imagine it'd cost a huge amount, but compared with the huge amounts we're spending on other defence items, perhaps we should be analysing that. But that's that's something tangential to our current discussion.
Yes, I hadn't heard that. It seems to me Australia, it's just first instinct without knowing anything about it. Australia is quite a big country to put an Iron Dome around. But anyway, we'll see, I guess.
That is a good point. Yes, I think, certainly. I mean, it makes, like, Israel is, obviously much smaller. So, yes, good point, John. Well, should we go on to the next slide? I've got more. The other thing I wanted to discuss was just on this general theme of irresponsibility, of a lack of fiscal discipline. We have the Tasmanian budget. Now, this is a government. It just strikes me as strange that we've got a government that is in such a high level of debt. So Saul Eslake's done some great analysis of the Tasmanian budget, with the latest one of which came out today. And Saul points out that Tasmania, if you look at the metrics in terms of net debt to gross state product, or various different metrics, Tassie's the worst in Australia at the moment in per capita terms or per GSP. Their deficits, their cash deficits are the largest, and they're consistently running net operating surpluses. So over the forward estimates, miraculously, they're going to start cutting spending and getting their budget.
I think you meant net. I think you might have meant net operating deficits there.
Yes, net operating deficits. Yes, that's correct. Yeah, sorry, negative net operating surpluses. That's correct, John. So they're running these. So they're borrowing to pay wages. You could argue effectively they're not even earning a surplus on their operating budget to help make a contribution to their their net capital work spending, and yet they're going ahead and they're committing to this $1 billion stadium just so they can get the Tasmanian Devils football team. It strikes me as just very irresponsible from a fiscal perspective. And that came out today, and Saul's done some great analysis of that, and I'd recommend people just check that out. it's another government Australia-wide that has essentially abandoned the original or the traditional commitment to fiscal discipline, and we're going to, we'll see the consequences of that in the future with, rising interest bills, inability to pay for public services, and concerns over the credit rating. So another example of the type of thing that we need to, campaign strongly against here on the ATA live stream.
Death and taxes. That's what we're calling it.
Death and taxes.
But yes,
very good.
No, it's a good point, well made. It's also a depressing point because we know this is true. We know we'll shout it out into the ether, but at the same time, it's not like the politicians involved don't also know that it's true. Firstly, I'd like to give them credit. If that chart that you had up before, if that is actually from their budget, I am appreciative that they put the fiscal surplus in there, because a lot of state budgets like to hide that line. They just talk about the net operating balance as if it's all that matters. Obviously, that fiscal line, the fiscal balance, is important. And you see there in brackets means negative. These are negative numbers across the board, which means the state government in Tasmania is spending more than they're taking in, going further into debt. And they're doing it in a situation where there's not much economic growth there. So it's not like the economic growth is sort of justifying the increase in debt. This is pushing up the real debt.
And I suppose this is why they think that the solution is something like a stadium, because look, I am sympathetic to their plight, because they've got a situation where a lot of the young Tasmanians leave Tassie. They don't think there's the opportunities there. They'll go to Melbourne or they'll go to Sydney to study, to work. And so the people in power are concerned about that. There's a view that, well, Tasmania traditionally blocks economic development. So as soon as there's an opportunity to develop something, even though the project is not a great one, or it's a stadium which is not going to be really that economically beneficial and could end up costing them money over the long term, that's not something that's necessarily going to pay for itself. They just latch onto it and think, well, let's go ahead with this because we've blocked so many things in the past. So many other economic developments have been stopped. Let's go ahead with this one and push this through. So the government's been very adamant at pushing this through, even though I don't think it's a great project, given the location. It's on a waterfront site, which could be much better utilised for something else. And it is going to require ongoing subsidy. So, yes.
You're being more generous than I am in terms of their motivation. I suspect the motivation is far more prosaic. It's a political calculation here. And this is the old saying, I think the Thomas Sowell quote, the first law of economics is that there is scarcity. You can't have infinite. You can't have everything you want. The first law of politics is to disregard the first law of economics. And I think we've got this constant tension between economic reality, which is sort of boring and dull, and it doesn't give you what you want, but it's true. It's there. It's going to smack you in the face eventually. But I mean, that doesn't sell well politically. And then you have the political reality. That realistically, what that means in this country is you're either in Liberal or in Labor, and you're trying to beat the other team. And the other team is saying something popular, and you need to say something at least as popular, or you are not in government, right? So that's the political calculus is inescapable. The economic calculus is inescapable, but they can push that back, right? In the eyes of the politician in the middle of the meat grinder that is politics, their calculus is, all right, that argument is great. That economic argument is fine, and you're right and everything, but it doesn't matter if we're not in power. So we have to get in power first. And to get in power, we have to promise the thing that makes the economics worse. And then somehow we'll find a magic solution later. But of course, then once they're in, they're one scandal away from the next election. And then the next election, they have to promise something else stupid. So we're caught on this treadmill of basically politics versus economics. And I frame the problem. I have no easy solution. I have nothing much to offer there. Except that I think it is important that more people become aware of that tension, because perhaps the awareness is the first step towards trying to do something about it. And by the way, we were talking about this a little bit before we went live, Gene. Another example, perhaps, of this conflict between economic reality and political reality, which and they're both real realities. Is there was a recent election for the New York City mayor, the mayoral race in New York City. And I believe a young flamboyant socialist has won that mayoral race on the promise of sort of free unicorns riding on free rainbows for everyone, or something like that. Coke in the bubblers, I think, was one of the policies, and all the various other freebies and giveaways. You don't know about that one, Gene? You're running for the school president. You run on a campaign of putting Coke in the water bubblers.
I haven't heard that one. That's clever. I like that.
But yes, he's doing the grown-ups equivalent of putting Coke in the bubblers for the mayoral race, and that's political reality hitting economic reality. We'll see what happens when he runs into economics, because you literally do have scarcity, right? Politicians can ignore it when they're running for an election campaign, but they can't actually ignore the reality of scarcity. There literally isn't enough for everything, and therefore you have to make choices, and economics, the study of choices, and then you've got to try and make the choices that maximize the well-being to the group of people that are in your country. So it's but the political reality is unfortunately just as real, and the reality is the majority of people wanted that. So what do you do about that? I mean, well, maybe this is where I kick in my sort of rant against democracy, but maybe that's for another day. Well,
I don't think you could rant against democracy. I'm not sure that's the right answer. But it's a reflection of, I mean, there are concerns about inequality, aren't there? So you've got a population that they think, oh, well, we're in New York City and there are all these wealthy people that are, earning ridiculous amounts of money, have all of this, valuable property. Can't we just tax them a bit more and redistribute it and give ourselves free bus rides? And what are some of the other policies? There's a rent control policy of some kind.
Yeah, rent free.
So I think rent free. So look, it's part of this general frustration, and particularly with the millennials and the Gen Z, and this is an issue here in Australia, there are concerns about intergenerational equity. The younger people think they're being hard done by, and the solution is, well, they haven't seen it in practice before. They haven't grown up as you and I did in a time when there were socialist countries, and you could see the failures of those countries on the news, and you could see the wall that they had to put up in Berlin to actually keep people in the socialist country, okay?
And you're aging us, Gene. You're letting people know how old we are. My grey hair didn't do that already.
Growing up, you'd see the rallies. They'd have their rally with the pictures of Karl Marx and Lenin and on Red Square in Moscow. They were practicing socialism. Not that I'm saying he's necessarily pushing them. I mean, he's heading in that direction. Not that I'm saying he's going to impose communism. But we've seen the adverse impacts of that. Whereas I think young people, perhaps they need to see it in practice. Perhaps they need to get this out of their system and see what happens when you have politicians who try to implement policies like that, which will have adverse economic consequences. So I just think perhaps it's because of the young population. They feel that they're hard done by, and that there are a lot of wealthy people in New York City they can tax to pay for it.
I think that as a motivation is almost certainly what's going on here. We've got around the world this populist moment. We discussed a little bit last week, this sort of anti-establishment, anti-insurgency movement on the right. I think you've got the same thing on the left. You've just got this, people are sick and tired of the establishment, and they're looking for something else, and they're looking for something that they think is new. And there's enough people now are young enough so that socialism looks new. It doesn't look old. To us, it looked a little bit old, right? Because we saw it failing and falling. But if you didn't live through that, it looks like a new fancy idea. And there's a lot of other new fancy ideas floating around. I would put that aren't new, that are actually old and failed. I'd put, we discussed it a bit last week, some of those trade restrictions that are becoming popular on the right in that same category. But I think the frustration is very real. The thing that motivates people to look for something else is very real. And that's what drives the politics. And you have to address that frustration if you want to be elected politically. But that doesn't mean the economics is going to work. So we're going to. There is of course, the conspiracy theory that the election of a socialist in New York was primarily being pushed by landholders in Miami, because this is going to have the exodus of all the New York millionaires down to Florida, push up the property prices in Florida, and all of those Florida landowners are going to pocket the capital gains. So that's one possible theory for that. Look,
That's
I
genius.
think I think it's being sorry.
Yeah, go ahead.
I think the whole impact of this is being exaggerated somewhat, because the other part of politics is you need to grab attention to do politics, and to grab attention, giving a nuanced, careful answer is boring, and no one tunes in to watch that. So you say the world is ending. No, I've solved all of your problems, and you got this exaggerated hope and exaggerated fear campaigns, because those are the two things that sell in politics: is false hope and exaggerated fear. And so some people are saying this is the new nirvana, and other people are saying it's all doom. He's not going to be able to cause as much damage as some people are worried about, because he's only controls the city, not the state, and the state has a lot of the policy levers, and the state hasn't gone quite as mad as the city of New York. So it's not going to be the end of the world. It will be an interesting experiment to watch. And was it the Hazlitt quote, or the Mencken quote, that voters know what they want and they deserve to get it good and hard? Well, maybe the voters of New York are about to get it good and hard.
Yes. Yeah. Think of it as an experiment. I like that. That's a Tim Ferriss
another glowing
suggestion. Yes.
Another glowing endorsement of your weird democracy idea, Gene. I don't know if this democracy thing's going to catch on, I got to say.
Righto. Okay. Well, let's. I've got a couple more slides, John. So should we press on? We'll get on. Okay. So the next thing I wanted to cover is some interesting figures that came out from IBIS World. So IBIS World are the industry data experts based in Melbourne. They do a lot of great stuff, and it's the top 20 manufacturers by revenue in Australia. I thought, well, this is interesting. Just looking at what are they, and what struck me as quite extraordinary. So these are billions of dollars in revenue. In the top 10, I mean, other than some of the people you might or businesses you might expect, such as Ampol, which is refining a lot of oil, and you've got CSL, Commonwealth Serum Laboratories, Vaccines. You've got BP, Amcor, BlueScorp Steel, Visy. You've got two gold companies. You've got the Perth Mint and this, I think it's Paleon, which I understand is a gold company, and so. It's quite. I was struck just by how significant that those gold companies are in Australia, and we have seen that with the high gold prices that we've had in recent months and over the last year or so, particularly more recent months, that the value of gold has just surged, and that really has increased our gold exports. It's increased the value of gold production in Australia. And I thought that was well illustrated in those IBIS World figures. So while some other of the large manufacturers have had some declining revenue, or they've had flat revenue, we've had increasing revenue for Perth Mint and that other gold company there, Paleon, which I should have checked what they actually do and how to pronounce it beforehand. But yes, I thought that was incredibly interesting. And on the whole gold issue, it's hovering around 4,000 US an ounce at the moment. It got up to around, up toward 4,400 to 4,500. There was this surge of enthusiasm, and maybe it was the retail investors getting in, and I think they got in at the wrong moment. They got in as it was going up, and probably had gone beyond what is a sensible value, and then we had some of the smarter investors starting to take profits, and then the price has gone back, but it's still incredibly high relative to where it has been in the past. I mean, only a few years ago it was under $2,000 an ounce, and you go back further and it's even lower. So this is the story around gold, I think, is fascinating. It's a story about people's mistrust of central banks, concerns about fiat money and the integrity of it, concerns about high inflation, possibly hyperinflation, even concerns about societal breakdown, which are becoming even more significant in the in our democracies, our Western democracies at the moment, for various reasons we've talked about. So I did find that that fascinating too. What's been happening with gold? Any thoughts on gold, John?
Yes, I mean, nothing too much different to what you were saying there. Just first to note, 100% return in 18 months is a pretty bloody good return if you can get it. So there is something going on here, all right, because that is a very big shift in the price of something that has been historically, and by historically, I mean for millennia, one of the most stable assets out there. So when that asset spikes in price, it's normally telling you something. So I think we can agree there is a message there. The problem, of course, is that gold doesn't actually speak to you. So you don't know exactly what the message is until you've got maybe 20 years of hindsight. You can look back and spot what's happening exactly. So we are being told something here. And people who interpret this signal correctly are going to be at an advantage. People who are unaware that a signal is being sent are at a big disadvantage. So for those watching along, at home, you're now ahead of the curve. You know there is a big signal that the world is sending you. Now you just have to find out what it is. And look, you mentioned it already. The most obvious things that this indicates is either inflationary fears, and we've had inflation already. That would cause some of it, and some more of the rise, because we haven't had 100% inflation in the last 18 months. So this increase in gold, some of it is caused by inflation. A lot of it is caused by inflation fears for the future, which would be factoring in the issues we've talked about before with Tasmania, is that we've got this ever-increasing debt being driven by seemingly unstoppable deficits. If that continues going long-term, eventually it's going to be monetized. They could just default, but realistically, most people have factored in that politically, normally the decision is when your debt gets too high, you so-called monetize the debt, which of course Tasmania can't do themselves, but federal governments can, and governments around the world are facing sort of eye-watering levels of debt. People are starting to factor in that they will monetize the debt, which is to say they will just intentionally have inflation. And this gold price tells you that people investing in gold are expecting that. So that's one thing to look out for. But the other thing it can hint at, which is related, is just troubles, right? Future economic troubles, and whatever they may be. This could be an indicator of factoring in future war, future sort of trade wars that lead to stagnation. Because if you have a shrinking economy, the two things that can cause inflation is just printing too much money, which is what governments will do if they have too much debt, or shrinking the size of the economy with the same amount of money. That also causes inflation, stagflation in particular. And that can be caused by stupid trade wars or more unnecessary wars. And in my opinion, most wars are unnecessary, but even more unnecessary wars. And as you said as well, I wrote it down before we came on here. I didn't know you were going to say it, but the same thing, just collapse. I wrote down here, wars, trade wars, and collapse. And people are worried about all of those. And any one of those, or perhaps multiple of them, could be the message that we're being given by this gold price. The other part of this story that's worth noting, I don't know how big a part of the story it is, but again, it's very worthwhile keeping your eye on it. One of the things that's been driving demand for gold over the last couple of years has been a lot of BRICS countries have been building up their gold stockpile.
Yes.
It could be for any reason, but there was also talk about BRICS potentially exploring the idea of a gold-backed currency to be an international currency for international settlements. Currently, the currency for most international settlements is the US dollar, making the US dollar effectively the world's reserve currency. When that gives the US a lot of economic power on the world stage. And not all of the other countries in the world, such as Russia and China, appreciate that America has all of that power. If the BRICS is able to establish an alternative global currency, that could be a world-changing event. I mean, that itself could lead to war and trade wars and collapse. So the eventual potential decline of the US dollar as the global reserve dollar will be one of those big moments of the history of economic history. If and when it happens, I should say when, it's almost certainly going to happen eventually, but it's going to be a massive point. And it could be that the BRICS countries buying up gold in preparation to create a gold-backed currency, that might be part of the explanation as well. We will see. I mean, I honestly don't know what the answer is. It could be any of the above or multiple of the above. We'll only know with 20 years hindsight. but it's worthwhile worrying or thinking at least about all of those potential outcomes.
Would that be sensible for them to set up a gold-based currency? So if we were writing the briefing note, I'm not sure we'd be recommending a gold-backed currency. We know from economic history that having your currency back from gold can constrain your policy options, can't it? This is the whole Barry Eichengreen golden fetters argument. We knew that Bretton Woods broke down eventually. So Bretton Woods had a semi-gold standard, didn't it? So I'm not sure that it would make sense to have a gold-backed currency. As much as I'm, critical of the public, some of the public finance that we've had, I'm not sure that it makes sense to have a gold-backed currency anymore.
Three quick points on that. One is I believe the plan is a gold and commodities backed. So I guess they might have a more nuanced version of a commodity backed currency that's not just gold. And I think the ideal commodity backed currency, in my opinion, would have a lot of gold and other critical minerals as well. So they may be. And if that's where they're going down, if that's the path they're going down, it may well be what I would advise them. Maybe not what you would. We can have a disagreement here, which is always fun. But two things on that. One is political, one is economic. And the economic one might be the fun debate. So I'll do the political one first. Yes. Politically, how would you convince people to step away from the US dollar? I mean, it seems to me that the US government has already established that they do not have credibility to run a global reserve currency. They are running up eye-watering debt. They print money and they export their inflation around the world every time they want to get out of political trouble. They do not have the requisite credibility to control a global reserve currency, and yet they do. And I think there's a very good reason why they do. As bad as their credibility is, it's still better than anyone else that could replace them. Right? Who are we going to trust more than the US government? I don't trust the US government, but are we going to trust the Chinese government more? Are we going to trust the Russian government more? Are we going to trust the Brazilian government more? So the issue they've got politically is if you did want to shift away from the US dollar, you would have to create a way to build in trust that it's not going to be white-handed by future political decision makers in unstable or untrustworthy systems. And so I think politically, making it gold-backed would be the way to ensure that people trusted it and were willing to take a risk moving away from the US dollar. So that's the political side of things. On the economic side of things, I agree with you that shifting to a commodity-backed or gold-backed currency takes away your policy options. But let's scratch the surface there. If you look into what they mean by policy options, the policy option that's being constrained is printing more money to monetize your debt. That's the policy option that they have, is to pump prime and throw more money out there, either to monetize the debt or because they think this is a recession, we can get out of the recession by just sloshing more money into the system. So that's expansionary monetary policy, so-called. That is the policy option you have if you have a floating fiat currency. You don't have that option if you have either a fixed currency or a gold-backed currency. I don't want our politicians to have that option. I don't trust them enough, especially in an age where it seems to me that politicians are increasingly distrustful of independent reserve banks. Because independent reserve banks have, I'm not a big fan of government money, but you have to admit that they have got a decent track record over 40 years of being fairly responsible, the independent reserve banks. I think we're going through a populist political age where people are increasingly demanding more political control over reserve banks. I got to tell you, I would prefer things that constrained their policy freedom at this point. So I think that's the reason for a gold-backed currency, is to take away their policy freedom.
Well, we'll have to look into it, John. I mean, maybe we'll do a deep dive in a future episode. I remember that reading I think it was in Alan Greenspan's autobiography, he had the story about how Reagan, I think it was Reagan, had him and Milton Friedman at a dinner one night in the White House. And he asked, because Reagan was pro-gold standard at one stage. So if you see before the election, the 1980 election, he was on, I forget who he was talking to, whether it was Phil Donahue or one of those talk show hosts in the States. And he was talking about how he wanted to look at reintroducing the gold standard effectively, putting the US dollar back on gold. He thought that Nixon let the team down. And then he asked Milton Friedman and Alan Greenspan what they thought about that. And they said, well, it's actually impractical at the moment. it would do more harm than provide benefits. And I mean, one of the issues is that it means you don't have that independent, you don't have the options with monetary policy. And also, is it your price level then dependent on the amount of gold? You've got the rate of gold or new commodity discoveries, that's a variable, and then you've got the growth of your economy. So what if you don't have the gold and the commodities keeping up with the growth of your economy? Doesn't that therefore mean you would have, what does that mean? You'd have a declining price level, doesn't it? You'd have deflation. Now, you may not necessarily be concerned about that. I mean, maybe that's not such a big deal, but then that becomes a variable influencing your prices.
Yeah, well, I mean, I'm not worried about a small amount of deflation. I think that people fearmonger on that for stupid reasons, but large deflation can be a problem. I agree with you there. Much like large inflation, the same with small amount of inflation, small amount of deflation. I don't think the world's ending. Get too much of either of them, and you start really distorting prices, which leads to malinvestment and consequent recessions, business cycles, in my opinion. But so I agree with you there. The issue here is with all of these currencies, there's got to be some sort of money supply change system. Right. So with Bitcoin, their system is once you've got all of the Bitcoins produced, no more money supply. Right. They've got a very simple rule. So that's sort of Bitcoin's selling point is we have no more supply. So Bitcoin will be a deflationary currency if it ever becomes a currency. Right now, it's an asset. It's more of an asset than a currency. But if it was a currency, it would be a very deflationary one. I think it would be so deflationary that people would hold it as an asset and not use it as a currency. That's my critique of Bitcoin. But so the critique there isn't the idea of, I'm not critiquing cryptocurrency. The issue is I think they've got the money supply rule wrong. So what is the right rule? Well, in my opinion, it's a rule that would roughly keep inflation around zero, inflation to 2 to 3%. I always say to you, I think it should be lower, but fine, 2 to 3 is close to zero. So that's not a bad rule. And that's the whole issue with the status quo. That's what argues for the status quo. And I very much understand that. I have a lot of sympathy for it, and it's worked quite well. The issue here is, I guess, I'm looking at this at a slightly longer term. I'm looking at what policy sustains over decades, not just the next 1 or 2 election cycle, but let's look at 50 or 100 years in the future. And I don't trust long term that the political system won't eventually devalue a fiat currency. There's an old saying that in a long enough timeline, all currencies return to the value of the underlying currency. And the underlying currency here is a little piece of paper or a little piece of plastic. Every fiat currency has eventually been devalued. It's normally not devalued in the first 50 to 100 years. And it's eventually devalued like a few generations into the future, people get used to it. You may not know this. The first fiat currency that had paper notes that they could actually print more of was the Yuan dynasty, created by the descendants of Genghis Khan in China. And they created the innovation because, of course, China's first place to have paper, and they were the first place to have paper money. And then they separated that paper money from an underlying backing, and it worked okay for a while. And then eventually someone worked out, hey, I could print more of them. And then you got your first ever case of paper money hyperinflation in history. And that's happened again and again and again through history. So one theory is, Francis Fukuyama, history has ended. We've solved all the problems. We can perfectly trust all future politicians. And I find that you simply have to say that sentence aloud to realize that that's not a certainty, at least I'll put it that way. So then you look around, what are the other options? Now, gold's money supply rule is not perfect. A lot of gold bugs like to sort of paint it as a perfect solution. It isn't perfect, but here's what it has. If the price of gold gets too low, because you've got too much gold. If you find too much gold, and it's going to be inflationary because finding more gold is increasing money supply, right? That's the money supply rule is how quickly you find gold. You find too much of it, the price goes down, it decreases the incentive to look for more gold. Fewer people can justify keeping their gold mines open. So next year you find less gold. It's self-correcting that way. The same way, if you don't find enough gold and there's not enough gold in the system, you could say there's a monetary contraction, and that could be a bad thing. And we saw that in the 19th century. Sometimes you didn't have enough gold. There was a monetary contraction. It caused a short, sharp recession. Prices went down, adjusted, and started growing again. And that's the thing they were trying to fix with fiat money. But if you don't find enough gold, the gold price goes up. That's deflation. The gold price goes up. More incentive to look for the damn thing. So you've got a built-in mechanism. There's always people out there searching for gold, And you've got a built-in mechanism, which is the incentive to go and dig gold out of the ground, which costs money and takes effort. And so you only do it if the reward is there. So it's an imperfect effort because it does take a year or two to adjust. And that's why you saw some short, sharp recessions in the 19th century. But they did correct, and it doesn't require trusting a politician. So that's why I think a fiat currency run by Jesus would be the optimal one, perhaps. But if we don't have Jesus, gold might be less bad than fiat currency run by mortals.
I love it, John. This is the type of brilliant economic insight you get on the ATA Death and Taxes live stream. Love it. That's a good argument. I'll have to think about that some more, and we could unpack it a bit more in future weeks. Very good.
Well, although having said all that, just coming back to end the circle on that discussion, I suspect what China and Russia and India and Brazil are being motivated by is more the political calculation. How can we convince people to get off the US dollar? So I'm not convinced that they're convinced of my economic arguments, but political necessity may require them to just back it with commodities so that people trust them.
Yes, yeah, they probably would need to do that so they can get that trust. Yeah, so fascinating. We'll look more into that in coming weeks because this is a huge issue. Ken Rogoff has written his book recently on what was it? Our Dollar, Your Problem, about the exorbitant privilege and the benefit the US gets from being the global reserve currency, and looking at how he makes the argument that these shifts don't happen all that often. They happen maybe every 100 to 200 years. There'll be a change in what's the global reserve currency, but the US it's getting up toward its retirement age, really, isn't it? I mean, it's past it's not in the sort of its prime anymore. We're getting to the situation where you really do start wondering that. You have to be asking these questions. So
yeah, well, it's only really post Nixon that we've had just a fully US backed. We had the US as the reserve currency, but before then the US was supposed to be tied to gold. So you had a two-tier system with gold at the end up till Nixon. Right. So it's only been around for 60 years, where we've just had only the faith in the US political system was the backing of the global currency for about 60 years. I think the point he makes about it only changes every 100 or 200 years, that's roughly correct. That's why I'm saying this is if and when it happens, a big moment in economic history. And I think it will lead to the end of the American empire and almost certainly some sort of massive war as America desperately tries to stop it happening, because it will then lead to them having to massive austerity, debt default in a world where people don't need them anymore. So it could lead to a Latin Americanization of the USA. And I think American policymakers are acutely aware of this danger, and I think they would take drastic steps to try and prevent it. So it's quite a geopolitically scary moment when it happens.
Correct. Maybe I better brush up on Ken Rogoff's book, and maybe we'll do a segment on it next episode, next live stream, because yes, I think he's probably more. I think he thinks it does have some life in it yet. So I may have been mischaracterizing this idea that it's getting toward the end of its use-by date. But I think he's certainly concerned about the risk of that happening. But he is still relatively optimistic it's got some life in it and they can fix their problems eventually. Now, in terms of, you think it's only since the 70s, I mean, the US dollar's been effectively global reserve currency since the end of the war, hasn't it?
Yeah, Bretton Woods. But until then, the US were at least nominally constrained at what they could set their dollar at vis-a-vis gold. So it was supposed to be that the US dollar was pegged to gold and everyone else could float or fix to the US dollar. So the US dollar was the global reserve currency. I'm getting a phone call. How can I turn that off? Okay. The US has been the global reserve currency for about 100 years, but they've only had the freedom to be able to just entirely manipulate, control it, just print more money. They can monetize their debt whenever they like, ever since Nixon. And they have. And the issue with it is, if anyone else monetized their debt to the same degree as America, they would create runaway inflation that would be a disaster for their country. But America, whenever they print money, they only experience about 1/4 of the inflation of the money they print, and they export 3/4 of their the money they print around the world to create little bits of inflation for everyone. And so we all cop that little bit of a cost. America pockets all of the benefit, and that is the significant benefit you get from being the global reserve currency. And America, I think, jealously guards that. But yes, they have been. You're right. The US dollar was the reserve currency for the last 100 years, but only, say, the last 60 years with full freedom to do whatever they want.
Good point. Okay. Well, we might move on to our final segment. Actually, we might have two more. The other things I found interesting this week were the government's plan to have 3 hours of free power each day. Now, this is something that Matt Canavan has had an absolute. He's been killing it on social media on this. He's got an A-grade game in social media. It's rather funny. I mean, he's got a good line for this. Do we get a set of steak knives with this, which I think is very amusing. Now, I think we'll have to have a deeper dive and maybe try to get an energy policy expert on this show to talk about it, because this is an area that gets complicated very quickly. So I can understand partly where the government's coming from, because the problem they've got with all of these incentives that there have been to install solar and the rooftop solar, and we've got all the other solar, the larger scale solar, the solar PV farms. We've got all of this excess energy during the middle of the day, and there's not enough demand for it at some times. And what you end up with in the wholesale market is negative prices at some stage. They actually have a problem that they've got too much supply, and so they're wanting to shift supply into the certain parts of the day, like the parts of the day where there's all of the solar power being generated, and this is a way that they think they can do it. It's like the market's a bit of a mess at the moment. I think we need to sort of think seriously about this and see, well, okay, how does this compare with other policy options? Some people are alleging that this will mean that you have to pay higher prices in the other hours of the day. And so what this means is that it will disadvantage those poorer households who won't have they won't be able to charge their EVs during that time or run their pool filters or pumps. So it's potentially inequitable. I think this is the line that my friends at the CIS, my colleagues at the CIS, such as Aidan Morrison and Zoe Hilton, are running. So there are a lot of concerns about this policy, but at the same time, I partly understand where the government's coming from with this, because they've got this real issue of the fact that there's just too much solar being generated or too much energy at a particular time of the day, and it's causing all sorts of issues for the grid. I mean, energy. I mean, as we know, electricity, energy policy in this country is a total mess, and we're not going to be able to solve it in the next 5 minutes of our live stream, John. But I thought I'd bring this up because I thought, I mean, Canavan's line there just, it's just gold. Australians to get at least 3 hours. This is the Guardian headline. Australians to get at least 3 hours a day of free solar power, even if they don't have solar panels. Do we get a set of steak knives with this? That's A-grade social media skills there.
Here's my next sound. Look, yeah, I basically have the same take as you, and it sounds like as the CIS would have. Look, I think it's self-evident that if you require retailers to charge a lower price at some times, then they're going to have to charge a higher price at other times. And I believe that one possible way they would roll out this policy is to require retailers to have one plan that included this. And then the people choose to have that plan or not. And you may find that plan ends up not being particularly popular if it's a plan for 3 hours free, and then during peak hour, the price is slightly more. Look, the underlying motivation here is very understandable. It's basically they're trying to make sharper price signals at the retail level.
Yep.
These price signals are flowing through to the wholesale level. As you say, the prices go negative at the wholesale level quite regularly in some places. That doesn't always flow through to the retail level, because at the retail level, people want a bit more certainty and simple pricing, 20 cents off peak, 30 cents peak, something like that. And so it tends to be more smooth at the retail level. But if the prices are smoother at the retail level, then there's less of a sharp price incentive driving behavioral change. So I can understand that. That's what's motivating them. They're wanting sharper price signals at the retail level. Yep. The issue there, though, is price signals work in two different ways, right? They're supposed to work on supply and demand, right? And this one's trying to work only on demand, and it's trying to push people to not use electricity in the evenings. I mean, that's ultimately the goal, right? The goal is not just to increase energy use during the day, it's to increase energy use in the day that you would otherwise do in the evenings when that power is not in the grid. So it's quite easy to increase energy use during the day. You just leave your appliances on. But it's only useful if you have shifted and therefore use less aircon in the evening, or less heating in the evening, or the TV's off in the evening, or you're not running the oven in the evening. And that's a much harder proposition to see happening with this idea. And that's probably why this idea isn't going to have legs in terms of actually helping people, except for people who have batteries, because people who have batteries could just charge up the batteries during the free hours and then deplete the batteries during peak time. It goes to the issue of equity, because realistically, who has batteries? More often the richer people. I think it's almost certainly going to lead to higher prices during peak hour. It's almost certainly going to be inequitable. I understand their motivation. The problem is, what we want is a price signal that also incentivizes the supply side. And that's when the government really runs into something difficult, because that would involve incentivizing people to create less solar during the day. But that's the only time you can make solar, right? You can't do it at night. Price signals, if they were sharper, would give a greater incentive to create energy after the sun is down. Now, of course, we've had that technology for 200 years. It's you burn coal and you could have energy when the sun goes down, or various other forms of fossil fuels. But the government there would be faced with a situation where they're increasing the incentive or increasing the profit to people who can produce energy when the sun goes down. And the issue there is solar just can't do that. But if you're talking baseload, a lot of baseload power, you can't just turn it on and off. You can't just turn it on in the evenings. So you need to make sure it's profitable enough over the whole cycle to incentivize them to keep the baseload power on in the evenings, which is exactly what we used to have. It's exactly what I think you and I think we should have again. Just go back to reliable baseload power using the plentiful resources we have in this country. But that's exactly what the government doesn't want to do. So they don't actually want to use the price incentive on the supply side where we need it. They're instead trying to force the supply price incentive through to the demand side and get people to what? Not use their evening appliances in the evening. So when you cook dinner and sit around the TV with your family at the end of the day, you're going to shift that and do it all at lunchtime instead? How? The kids are at school. I mean, that's not dinner time, right? So I'm not convinced it's going to work the way they're hoping.
Yeah, absolutely. It needs a lot more just management. We've got a comment there about how you'd also need a smart meter. Yes, it just requires a lot of a lot of planning, a lot of effort. I'm a bit skeptical of it. When I saw it announced, I thought, seems like a bit of a gimmick. Is that really going to solve the problem? But anyway, huge, very complex area. Maybe we should get an energy expert on the show. We could get Aidan or someone like that, or someone I think Andrew Murdoch or someone like that would be great to talk to about these issues.
Well, Aidan would be great, I think, if we can convince him to rock up.
Well, I mean, this is where the highest quality economic analysis is occurring in Australia at the moment, John, on this live stream. So I think absolutely. Now, how do we get the slides
back up? Do you have one more?
I do have one more, because I want to talk about the AI bubble. So one of the big things we've got to look out for in the coming months is, when is there going to be a very large correction to the share markets? Because so much of the gains over the year to date have been driven by those AI stocks, particularly NVIDIA, and also in the States we've got what's the Peter Thiel company, Palantir, with that's doing all of the sort of secret squirrel stuff. So a lot of the gains are being driven by these AI companies, and there are people who are alleging that the US stock market or the US economy is just one big bet on AI. That's something you'll hear the commentators saying. And there was a little bit of a tick down, or a 1% drop in S&P 500 the other day, because people are starting to be concerned about the sustainability of these valuations of AI companies. And the big short man himself, is it Michael Burry? He has made a significant bet. So he's shorted NVIDIA and Palantir. He's made a $1 billion bet against those stocks. And so that is making other investors wonder about the long-term sustainability of these valuations, which roughly, if you look at that chart there, you've got roughly 2/3 of the gain year to date in S&P 500 is due to the AI stocks. You strip them out and it's roughly 1/3 of that. So making a huge contribution. If we compare with Australia, I mean, Australia, if we index or we set both Australian and US share markets equal at the beginning of 2023, and then look at what's happened since then, we see the US market's gone up about 70%. Our market's up around 20%, depending on where you start the index from. It could be a bit different, but the gains in the US have been just extraordinary, and that's because of that's the center of AI. That's where the big AI companies are. So I think it's the US market that will be, if there is a correction, that's the market that's going to get hammered. We'll get hammered to an extent, but I think the big losses are going to be in the States. Perhaps there'd be some selling off here too, and also if there's a crisis worldwide, there's that perverse thing that can happen is, even if the crisis starts in the US, often people look at the US as a safe harbor and money goes back to the US. So I don't know. I mean, we're not making any financial advice. I think I wouldn't hazard a prediction other than to say that it looks like the markets in the US particularly is overvalued. You can see that with the price earnings ratio. That's this Schiller cyclically adjusted PE ratio measure. This is a very well-known measure of valuations. I mean, it's still not as high as it was in the .com boom time when it was up around, I should have put my glasses on, did it get up toward 45, and now it's getting up toward 40 if I'm reading the numbers off that correctly. So it's not quite there yet, but it's very high, and there's a lot of concerns about the sustainability of the US share market at the moment. So some important data to keep an eye on, and I wouldn't be surprised if we're talking about a very substantial correction in the share market in the next 6 months or so. But who knows? We'll wait and see. I could be proven wrong, quite clearly. Yes.
Oh, I think you're going to be. I think you'll be proven right, but I think there is a contest over how you would interpret that. So one idea is that the AI bubble, AI bust. I suspect some of what that is inflation being hidden in the asset markets, because America has pumped out a lot of spare money, and it goes somewhere. Some of it goes overseas, but you have to put it somewhere. And in Australia, we often put it into property and keep pushing up those property prices. Property prices gets high enough, you start putting it somewhere else. And if you put it into stocks and everyone thinks the same thing, that has to push up the PE ratio. And you're seeing here that PE ratio edging up. I mean, that's the total PE ratio doesn't necessarily have to go up if people are just shifting into AI, but out of other stocks. But it doesn't seem like they're shifting out of other stocks into AI. Just more money is going into the share market, full stop. And so that's what makes me think this could be just an AI bubble, as you say. It could be just hidden inflation, or it could be a mix of the two. Most likely, most things are a mix of two explanations. But either way, it would pop, right? Whichever scenario is true, you would see a correction at some point. So look out. Although I guess if we just keep having runaway inflation, then you'll keep having runaway inflation in the share market as well.
But then the earnings should go up too, shouldn't they? If you've got runaway inflation across the economy, in nominal terms, the earnings will go up too. And so
well, yeah, that's why I was saying at the moment, I think this is hidden inflation, right? So hidden inflation,
yes, yeah,
you're not actually seeing inflation because in the actual consumer market, you're not, people aren't spending more, prices aren't going up, but there's more money just in the economy. So like a simplistic look at it, you'd say, all the money came into the economy, that must cause inflation. Oh, look, it hasn't caused inflation. What happened? Well, one of the answers when that situation happens, which it does sometimes, the money has to go somewhere. It literally is somewhere. And sometimes where it is in the stock market or in the property market, which is why I refer to it as hidden inflation, not a technical term. But it's that could be what's explaining this. And then if you eventually do see that translate into inflation, the stock market will keep going up, but the PE ratio will adjust because the earnings will go up, but it'll be inflated, as in devalued dollars being spent. But we don't know yet, so don't take our investment advice. We're not giving investment advice, but we're just showing you interesting things to keep an eye on so that you are forewarned about what may come in the future.
Absolutely. Well, that's the end of my wrap up, John.
Wonderful. Well, I think that's brought us quite nicely to just over an hour. I think there was a good mix of topics. I think that was fun. So let's call that a wrap. Thank you very much, Gene, as always.
Thank you, John.
We are back here on Thursdays. We're trying out different times. So if you've been tuning in at the exact same time each week, you'll be frustrated, as we've been experimenting with different times to see what works best, both for our convenience and for the viewing public. But it is Thursdays. We are on Thursday evening. Currently, it is 7:30 Brisbane time, which is 8:30 for you dirty Southerners. And I don't know what it is in Adelaide and Perth, but you guys can work that out yourself. But at 8:30 Sydney time, we'll call it. That's what we've done today. We're back each Thursday evening doing a roundup of the economic news and the political news, most often of the week, from a market sympathetic perspective, although hopefully we argue sometimes. So thank you for joining us. Please do come back and join us again next week. Until then, from Gene and John from Death and Taxes, signing out. Stay free.